Hi everybody, I've got something incredible to show you, and it's a product that guarantees you tax-free income, or you could use it to borrow against and not even pay it back. Be your own bank, if you will. But this is not a sales pitch. I'm not going to ask you to sign up or do anything like that. It's just informative. It's an insurance product. I've been an agent since 2017, and I'm trying to focus on some life insurance concepts here, and that's what this is about. And if you don't have time for this right now, please save. And while you're hitting that save button, do the like, subscribe, share, the whole 9 yards, and I'll get back to you later. But if you've got time, this is only going to be like 2-3 minutes long. I'm going to whistle right through this. I'm just going to show you and let you try to figure it out and get the wheels turning in your head. This is for you. It's not for me. All right? So, this is something for people that already have money. And, again, I'm not trying to sell you a get-rich-quick scheme or nothing. This is if you already got money, you want to protect your assets, and you want to guarantee yourself an income stream during your retirement, or you just want something that's going to be safer than the stock market, safer than mutual funds, way better than your IRA, 401k. It isn't annuities where you have to have a guarantee. You have to take a distribution out. You don't have to take a distribution. You could set it in there and forget it, or you could use it to pull tax-free income. Tax-free, what I said, right? Okay. There's also an excellent way to, if you want to gift your nieces and nephews, grandchildren, your own children, or anybody that you want to give the gift of prosperity, so that they have a life stream of income when they want to retire. All right. This is also going to be on my website. This video will have a link to my YouTube channel. My website is youragent.online. All right, youragent.online. So let's move forward. Here's an example of a 30-year-old male, non-tobacco or whatever, non-vape. Haha. So we're just going to put in 5 years of income, or 5 years of premium, roughly 10 grand each, and then we're not going to pay anything after that. We're just throwing the money in there and let it sit, let it smolder for a while. 30 years old, right? So we got total investment 47 grand, and so on year 6, notice that he's already liquid at $48,000. Already got more than he put in. That's liquid that you can pull off of, and a death benefit of 250 grand, right? So that's the beginning. Let's scroll to the future. Hey, he gets married, wants to have some kids, whatever, and age 45 says, I'm going to buy another house. He can borrow against that right there. $88,000 as a down payment and not pay it back, or pay it back. Better off you pay it back, and I'll show you why. Because when it comes to retirement time, he's going to have a nice tasty income stream of $31,000 tax-free every year. His cash value at this point is $360K, and his death benefit is $439K. Okay? Pretty tasty for only a 47 grand outlay. And now let's scroll down a little bit further. After 15 years, he's already pulled out $468,000. Not a bad return. And he's still got $257,000 death benefit. So let's keep on going to age of 90. So now he's got pulled out a total of $781,000, and still has a death benefit of 90 grand. So there you go. That's all I wanted to show you. And if you're still hanging on here, there's something else I'd like to show you. What if this was something you gave to your child? You don't even have to throw down $50,000. You just throw down $15,000. So you make five yearly payments of 3 grand each. Total outlay of 15 grand, right? Pretty simple. And so at his death benefits could be riding around $447,000 right there. Okay, and he won't be liquid until, with this plan anyway, this particular one. This is different than the other one, but 10 years later, completely liquid. Now here's the thing: if you're the owner, you could borrow against that, or the kid can, but you don't want a 13-year-old playing with that money. So the idea of being a gift, though, is you got to make them the owner. Then they can hold on to it and do whatever with it later. But you probably wouldn't want to do that for an 18-year-old, not a 3-year-old. So, okay, scrolling forward in our time machine mouse. He's 30 years old. He wants to buy a house or a car or something. He's got 54 grand to play with. All right. Now, keep on going to the future. He wants to retire. It's my favorite song. Now he's going to get an income of $39,000 tax-free. Now look at this whopping death benefit. Ain't that something? Okay? So that's tax-free. Remember, but death benefits are also tax-free. So let's see. He's going to get paid until, on this one, I think I did 20 years. So he's being paid till 84. And he's still got $39,000 coming. And then he's got $183 still left to play with. And he could also say, he's like, man, I don't think I'm going to live another year. He could go ahead and take out $135, pull it all out, tax-free, party his ass off, you know. So anyway, that's it. That's it in a nutshell. Quick and easy. I hope you're intrigued by what I just showed you. There's so many possibilities. I'd like to be the guy that would help build your asset building plans and protect your future and as well your family and everything else. I also sell other insurance products. Please contact me through my website, youragent.online, and or you can just try to direct message me on here, and hopefully I'll see the feedback. Anyway, have a great rest of your day. Thank you for your 2-3 minutes.